So we came into structure. Now, the one thing that doesn't make this situation the greatest and why this wouldn't be an aggressive setup for me is because we have this underlapping structure. So you can see our VS1 level, that purple box. You can see it's a little bit lower than where price currently is, right? And that's because we have this wick down here from back in, what, July. So the tough part about this is understanding that price can have the ability to do what it did before, right? These are two beautiful 3-bar reversals, by the way. Look at this, 1, 2, 3, and then 1, 2, 3. Maybe you think we'll get a third? Some repetition there. But price can push lower. So you got to be a little bit, either you got to have a better level for stops below that VS1, right? Or wait for a more conservative way to enter to kind of give you more proof that we're ready to turn around and not test that level before we actually do. But that's going to be the case all the time with kind of overlapping and underlapping levels of structure. So we drop one time frame down. We can go down to a 240 chart, right? Again, you can see very nice 3-bar reversal down here, right? You may ask, Akil, how come you didn't take this trade? And it's what I mentioned before, right? Because we have the underlapping levels of structure, this causes for me to take a conservative approach instead of an aggressive approach. Now, if we had the same type of 3-bar reversal at the extremes of structure, it's a no-brainer trade for me because I don't mind being aggressive if I get in at a very good price point. But because I want to be more conservative, this is when you shift from, or when I shift from 3-bar reversal to double bottom. Does that make sense, guys? So you're being more conservative in quote unquote worse trading opportunities. I don't say, maybe worse is probably the wrong word. I'm trying to think of another word to say because I don't want it to seem like worse, like it's a bad trading opportunity, but I guess worse in my eyes, a higher risk trading opportunity. I don't know. But fill in the blank there. But I want to be more conservative in these type of trading opportunities than ones where we're kind of at the level. So we look at this right here. And again, we got a 3-bar reversal, which is a fine entry. What I'm waiting for is a double bottom. So if price action can come down, and this is be good for if Stuart, I know you watched the recordings of a lot of things if you're watching this, or Tom, sorry, Tom was yesterday's question about the double bottom. Here's a double bottom, right? Rain mentioned yesterday some of his requirements are that, one, RSI goes over or goes to the extreme on the first test. Do we have the RSI oversold? Yes, we do, right? If we have a double bottom, we can look for potential divergence. Divergence would mean that our second test on the RSI, in this case, is going to be higher than our first test, right? We can call it a minor level of structure. So if you're a CTS trader, right, look left, structure leaves clues. I would call this a minor level of structure. Now, why wouldn't I call it a major level of structure? And minor and major, if you're using the CTS scoring system, is going to be the difference between 1 point and 2 point. I wouldn't call it a major because, again, the lowest swing point is going to be actually to move to our left, that underlapping or overlapping level of structure we talked about earlier, right? So you got 1 point for minor structure. You got 1 point for RSI oversold. You'll have another point if we get the double bottom. You'll have another point if we get RSI divergence. That's going to put you at a CTS 4. What else can we do to add potential scores to our points to our score? I'm back. I'm having allergy attacks, all right? We went from like 90 degrees to like 60 degrees over the last couple of days, so my head's all congested. I'm scared to sneeze because everyone's going to think I have COVID, right? Ooh, euro dollar is going to be a good one to look at next too, right? Maybe we have some Fibonacci confluence. I think we're going to be a little bit short of the 1618, but good practice anyway. So Fibonacci extension from our swing high here to our swing low and back up. Oh, look at that. I correct it. We're right at that 1618. Now, here's what's important to remember for you guys that are new. Everything in the market, including structure, right? Zones. This is the art and science of trading, right? You can't expect stuff to turn around right on the nose, right? Now you can make rules that say right on the nose, don't get me wrong, but if you're using something for confluence, right, we're at the 1618, right? Yeah, we spiked a little bit below it, but we're at that level. So you can give it another point for Fibonacci confluence. That's going to be a CTS of 5. Nikki says psychological level. Are we at a psychological level? We are. Get this little bad boy out the way. Right above it. Right above it. I wouldn't count this as a psychological level because we haven't gotten down to it. I'd like to see a touch of it. But again, depending on that buffer zone, we're right around that level. You can say 49.50s as well if you count the 50s as well, the half points. So yeah, you can have a decent trading opportunity here for a double bottom. Now let's talk targets, right? Again, entries, you can enter at the technical completion of the double bottom. You can enter at the higher high, higher close after the completion, at the breaking close above. You can wait for an inside bar. We had a really good discussion on double bottoms yesterday in the Q&A if you guys missed it. So I would advise that you go back and watch it. You should be watching every Q&A. Orsi says, purple line for targets. Way to go, Orsi. Right? Just cheat and just use my analysis for your answer. Way to go. I'm the teacher that left the answer on the chalkboard. Yeah. Yeah, good job. Hats off to you. Way to be clever. Way to have original thoughts. Let me guess, you would have said that level anyway, right? Because you guys have been here at the live room for me for every day for like, I don't know how many years, and you know me pretty well. And that's the cool thing about if you guys are new, either joining or live. I think you'll, and for better or for worse, some people hate this. I've gotten really mean emails where people have talked about, you know, they're leaving the live room or they're not impressed with my trading because I do the same thing every day. And it's like, Akil, I just got bored, man. Like, you do the same thing every day. You look for the same setups. You analyze the same markets. And I'm like, first, I'm like, oh man, I gotta switch something up. What indicator can I? No, wait, no. That's what trading is. Now, I think what I think is, and I'm sure the people that say this haven't really spent a lot of time in the live room, but we do the same analysis. We look for the same things, but each individual day, each setup is unique. I think that's the cool thing about trading, where a double bottom is a double bottom. But every double bottom is a little bit different, right? Because every market condition is different. There may be a double bottom at major structure. This is double bottom at minor structure. Some may have an inside bar. Some may have an outside bar. We have FOMC statement tomorrow, right? I think there's always kind of a unique nature around the individual setup, no matter what it is in the market. That's what keeps things kind of cool. But the spinal cord of trading, right? The centerpiece is should be all the same, right? Your philosophy shouldn't change from day to day. Right? For some, it may seem boring because it's not the rah-rah light show that you expect. But I think if you really appreciate the markets, if you're a chart nerd, I think you like the subtleties of each individual opportunity. So back to Orsi just cheating and stealing my answer. Yeah, I would look for a retest of structure. You guys know me very well. Right here, 150.80s. Right, you got the 151 even handle a little bit earlier. What else can we do for maybe some confirmation around this level? Again, I always like to start with structure and then kind of work backwards from there. What else can we do? All right, so let's do Fibonacci retracement from this most recent swing high to swing low. See what that gives us. Look at that. 618 right in that level. That's a good sign. Let's take a bigger one as well from the main swing. Or not the main swing, but the bigger swing. Up here. Swing high to swing low. Yeah, everything is better in Canada. And we got a 50% right around that level. So you have two levels right now. You have a 382 and a 50% right here around 50, 60s. You got a 618 and a 50% right here around 50, 80s, 51 even. So depending on how aggressive, conservative you are, two different levels that you can pull from for your potential trading opportunity. Now, we don't have it yet, so we can't really measure out risk reward, but we can have an idea, right, beforehand. So if I know I'm going to use an ATR based stop, and my ATR is 49. Oh, pound yen. I'm thinking euro dollar. Yeah. My ATR is 49 here, right? So I look at 149.16 and I take away 49 from that. Who's good at math? 149.16 minus 49. 67. All right. So 67s would be our ATR stop. You can do, again, bring that Fibonacci extension, or retracement, excuse me, out again from your projected target level to your projected stop. It'll give you a good idea of where your 1-to-1 needs to be. That 50% retracement would be your 1-to-1 level. If you require a 1-to-1, then any entry below this level will be a valid one for you because it will meet your risk-reward requirements. Anything above it will be invalid, and you may have to wait for not a secondary, but a third-dairy opportunity, which could be like a 26.18 or something like that. So there's a trade breakdown for you. Decent opportunity. I'm gonna get this into our trade floor real quick before we dig down into the lower time frames. I saw one question go through, but if you have any other questions about this, type it in now while I'm getting this into the chat.